Hello, everyone. Welcome back to what is this? This is the Broiler Chicken Show. Bark, 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 bark. Actually, there's this room echoes quite a bit. I used to go when we were preparing to go to Portugal. I used to get all excited and go Portugal, right? And the neighbors would come down. Would you shut the hell up? Jesus H. Christ, I'm trying to sleep here. So anyway, I'm sure everybody upstairs just went, oh God, he's at it again. Anyway, well, hello everybody. And actually it was really cool. Somebody yesterday said they just I mean, I see it all over the world right now. It's a little depressing, but I guess it just is what it is. The human species is under just absolutely intense stress right now. And it seems to be coming from like 20 different directions. Military dictators causing wars that really don't have to happen. A lot of murder, death, despair, economic stresses, other dictators around the world causing just horrible conditions for their own populations. Suppose us in the West, we get spoon fed a pretty negative image of those. Who knows what life really is like on the ground? But some stories I'm hearing and reading about these days. Wow, what is going on with this silly species? Why is it like this? Makes no sense. Just I don't think that, ironically enough, I don't think it's unrelated. I think it's all in conjunction. We see what's happening in the financial services industry. And I don't know, is crypto part of the financial services industry now? I think technically it is. And so, what you're seeing with this debacle, if you will, in cryptocurrencies. And ironically enough, it's just so stunningly cliche. I put out a tweet the other day, and I find it fascinating. Right? I put out a tweet, and the tweet message was, like, I've watched 3 of these cycles go by, and yet the knee-jerk reaction is, well, you've been in crypto 9 years. You should be stinking rich. Why are you bothering to talk to us? This is kind of an odd response, I thought. But regardless of how I'm doing financially, and frankly speaking, I'm doing fine financially. Don't need to worry about any of that kind of stuff. If anything, a gentleman I was speaking to yesterday, I was kind of like, anytime you hear Brian complaining, you should probably tell Brian to shut the fuck up. There's a lot worse situations going on in the world, and you bitching and complaining about substitute drama teachers taxing you into the ground. That's paltry in comparison to what other crap people have going on in their lives in this screwy environment in the world right now. So anyway, the point being that ironically enough, it says it's politics, whether it be like actually like military, like people actually murdering each other legally. Yeah, right. Whatever. Thou shalt not kill. Isn't that how that's supposed to go? Anyway, so ironically enough, in the crypto space, we're going through a massive amount of anxiety right now. I see it in a whole bunch of different things all over the place, all sort of coming to a head here. So, with regard to crypto, like I said, I find what's happening here to be stunningly cliche. I mean, stunningly cliche. I remember back in 2015 when I first started up this website, 2014, really, the end of it. There was one gentleman, we actually even named a setup, and it's quite a famous setup in our library. And we even had to change the name because the name was so controversial. The guy actually was convicted of sexual blah, 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 Ron Jeremy guy. But the setup still works as good as it did that day. The setup is gold, but now we call it LJ's. But anyway, the point being that gentleman that he and we put together this Ron Jeremy setup, and really was primarily him. for the record, if any of you know who he is, I won't name names, but he freaked out and he literally lost it here at the end of 2014, beginning of 2015, in a very, very predictable sort of way. In that, the crypto kids, when I first came into the space with Bitcoin at like $1,100, to see it go all the way back to 150 bucks, they just couldn't believe it. They were just absolutely crestfallen. And yet the irony of it all is now you can see in hindsight, stunningly cliche. While nobody at this time really even knew what the hell crypto was, the emotional activity within the space was almost exactly the same as what I see going on now. This next cycle, of course, the entire probably learning from this cycle. In this cycle, as we were bumping along and dumping here, I noticed, like, I was touring through Europe and everybody just sort of accepted that the floor in Bitcoin, the value was going to be $6,000. And then all of a sudden, in November, what a surprise, the market just literally fell in half. Boom. And interestingly enough, at this point right here, I remember distinctly in sort of January 2000, I guess, I don't know, was it January? It must have been. Da Vinci and I got together and did a nice little video about, what's the prospects in the space going forward? And people couldn't even believe that Bitcoin was going to do a 50% retracement of this range. That high is 20 G's. This low is like 3,000 and change. So that's 23,000 divided by 2. While Bitcoin's sitting here at 4,000, the 50% rule says that this price has to go back to about 11 or 12,000. That's like a 3x on your money. I mean, gee whiz, that's easy money. And sure enough, look what happened. Doink, hit 50% level, and the bull market stopped. I mean, it's just stunningly cliche. I got to tell you, folks, it's remarkable. So the worst part about this, and this is what really bugs me right now, is that number one, this is actually stunningly predictable. And what's worse is that the behavior of the humans, and I like to show this one chart, and actually I was doing it on the daily brief on Friday, and people were very appreciative. Just trying to remind you, how this silly game works. Well, all these would be anyway. I think this is the one I want to show you. And come on, boom, there we go. So we could even go in the Twitter. I mean, who knows where the hell the damn tweet is. Probably if I went back and just surfed around this date here. Ironically enough, how ironic, in 1 year, the prospects of this space changing so much. But I even distinctly remember sort of posting this saying, you are here now. And the problem is what does here say? Here says, cannot prevent public from buying the top. And I'll tell you, the good part about this is hopefully a lot of you, I think about a good 1,000 people watch this video. Please pass this on. This is such a good lesson. I could not stop people from buying up here. In fact, there were some people, speaking of our buddy Da Vinci, there were some people that were just basically like, nah, but this time it's different. And whenever you hear that, if you want to learn something from this video, the moment you hear this time it's different, that is like different. That is like literally your cue that actually this is exactly the same as every other market top. As soon as you hear people start to talk about this, and just take a screenshot of this, write this down. Everybody should have their journals. I will say, on Friday, I I was feeling a little bit down for myself, and I wonder because Monday to Friday I spend 2 to 3 hours just chatting with the community. I like to do that because I like to give people the opportunity to feel as though the TRI community is very interactive. So if you have questions, we have a few students that have gone through the program now. The one student in particular, she's nearing the end of her level 3 program. It's beautiful watching her develop and blossom into the capitalist that I think she can be. And her husband, I'm sure, is overly pleased at how this has gone for their family. It's inspirational, I'll tell you that much. But anyway, the point being that I like for people to be able to joke and chat, and we do the Google Hangouts, and it's a very interactive experience. And I spend like 2-3 hours every single day, Monday. In fact, actually, from what I understand, our Thursday host is finding it a little difficult to do the show late in the evenings for him. He's over in Asia, and that's understandable. Maybe we'll do like a pre-recorded message from him for that day, but I might even come on and do the videos on Thursday too. If he decides that he wants to go the pre-recorded message route. But the point is that I really wondered whether this was even worth it. And really, I would appreciate, now there's about 25 people watching over on YouTube. I would appreciate if you guys in the comments could just let me know. Do you appreciate me sitting here for 2-3 hours just ranting away and hopefully dropping little nuggets of wisdom for you publicly? Is this value added? Do you enjoy this? Please give me some feedback. And I sort of did the same thing for the daily brief on Friday. And actually, I have to say, the comments that people sent back to me were overwhelming. So as long as you guys are still liking this, I'll just keep doing this. But I have to tell you, man, this whole game is just stunningly cliche. It's ridiculous. So once upon a time, back to our story. Like, I published this chart. Jeez, I don't know, but somewhere right up in here. Right? Somebody go and find the tweet if you want. Maybe I'll dig it up for tomorrow's daily brief or something. And we're going through what I would consider very normal, very sadly, very cliche market cycle stops. Let's see if can I just. Oh, it's going to get rid of that. I guess I got to put this. What size is this? This is 10. All right. Let's go 11. All right. So there we go. Then we get into sort of the, with the market breaking. And if we are in a bull market and you want to participate, you want to try and buy against lows, right? So you got that nice little low with the market zooming higher, and you see this pullback. It was actually quite pretty. And, if we actually did 38.2 to 50% levels off of this particular high, right? You see that there is that 38.2 to 50%, Ray Burchett, WD Gann, Mountain Man, right? We're starting to get into some areas on the chart that the technicians are going to start paying attention to. Collins, Pump, Chaser Zone. I love that. If anything, I think that's the one thing that also too, Foggenbaum. I got an absolute gift through this whole sickness cycle. And actually, that's probably the gift that the universe gave me, along with Stewart is now finally bringing my 1980s website into the 21st century. And this is fucking just killing it, man. I mean, it's so damn impressive to see this thing in action. So I think those are, and somebody was even commenting on YouTube, or on Twitter. I was even saying, "Oh, why aren't you worth hundreds of billions of dollars?" Blah 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 blah. And my payment is I got the website brought into the 21st century, and now this thing should make us a fortune now. On top of the fact that I think that there's great value in this information to help you actually make money from trading and timing your purchases and sales. I think this tool is perfect. So I'm going to be using it for my actual own trading. And just to show you how stunningly cool this is. We just had the most killer ass buy signal there in the market. This is absolutely exactly how this is supposed to work. And Chris, if you could maybe tag this so we could use this, like Josh, he wants like marketing material for Black Friday sales and all that kind of stuff. This is exactly how this is supposed to work. You wait for the histograms to get deeply embedded on in this particular case, if you're thinking about buying. And here we have the country funds. So these are like all of the different equity funds, sovereign funds around the world. China fund, USA fund, Canada fund, UK fund, Brazil fund, whatever. And this is the S&P 500. So this is like the biggest stock index around the world, right? Probably represents about 20-30% of the world's equity. So when they both get deeply oversold like this market is washed out. And the interesting thing about this is at this very moment, if you went over to things like social media and stuff like that, and you looked at the videos that the kids were posting on YouTube, they were all like, it's the end of capitalism. There's one guy who he did a video where he was like changing everything in his house to candle power because he figured electricity was going away. And, and there's another guy, oh, this is it. The system's going to go bankrupt. And a lot of these new sort of market player guys were all sort of convinced that the Fed was going to destroy the economy and blah, 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 blah. It just goes on and on and on. The point is it's just such a beautiful contrarian indicator listening to all the sort of new experts in the industry, all just insanely bearish. And it was just sort of like, it's just absolutely perfect. So you just wait for the histogram to get stupidly oversold and washed out, and then you just start hunting W's, right? This is everything that we teach in the education program. What is bullish market structure? In this particular case, these are just a couple squiggly lines in the oversold condition, and you see the W's coming in. So you look over at the histogram and you go, the market can't really go any further down. It's already down as low as it could go. There's only one direction this thing can go. And sure enough, this is the Dow Jones Industrials. This is the Dow Industrials breadth. This is the Dow Industrials themselves. And this arrow right here is basically, this is in our education program, we teach that this is one of the most powerful sort of single bar signals you will ever see. I don't know whether I should tell you it or maybe encourage you to take our education program. And what's interesting about this illustration is this setup is actually an incredibly conservative setup, waiting for the bullish cup and handle pattern to develop and just trading the cup and handle pattern. And look at what the darn market's done here. This is the definition of climbing the wall of worry. Ironically enough, when social media, and really you might argue all media because they're all basically owned and they all act like the humans. This is the way human beings act. When they are all negative and it's the end of the world, ironically enough, that's actually when you want to be a buyer. So it is interesting when you look over at crypto. What's the sentiment in crypto right now? Is it slightly negative? Do we really want to get too wrapped up in all of that? Maybe not. I mean, the irony of all of that, I mean, this is off topic, so I want to keep the message here solid, is you don't even have to take that much of a risk on a trade like this. You could literally take, and my rule, this is what I would do with all of my retail clients when I was a broker, is just simply say, look, if you want to take whatever you've deposited $10,000 with me, and you're going to get rich with that 10,000. All right. If you want to take 5% of that number, which isn't much money, in this case, $500, and you want to throw it at an idea, let's go buy an option. Right. And my rules about options, I typically like people to buy a good, 6 months at a time. Just, give it a bit of time to breathe. I don't really like the short-term trades. Our level 3 instructors and TA right now, both of them are absolutely enamored with spread trading. I won't get into that. That's very complicated. but it's a way that you can buy lots and lots of time and also get in on the trade very, very cheaply. Super. It's a great way to, save you some money. So point of the matter is that there you could go the options route with a trade like this, and you could literally take that $500 and you could see, and this would be a really good exercise. I think I might even do it through the week, is we have like Wayback machines for options pricing, just and illustrate what did the options, like if you had bought a call option from this dotted line way up here when all of the social media kids were basically ready to commit suicide, how did that trade go? And I have a funny feeling it was probably a good 5-10x. So anyway, I'll look into that. Maybe in the daily brief tomorrow, I'll give you an update on that. Maybe we can use that in the Black Friday marketing campaign. I don't know. But the point here is that this is my life's work, and it is coming to fruition. So how did I get paid this past cycle? Mr. Pancakes, he paid me big time, and I'm very appreciative, Mr. Pancakes. Let's see. So that, site development wise, super enthusiastic. I tell you, we are basically on the doorstep of building a better mousetrap. And I was even explaining to a guy last night, this is easily $1 billion product now, easily. All it needs is it just needs to be marketed. The message needs to be articulated to the public how insanely valuable this is. I mean, I don't know. Do you want to make fucking bucket loads of money? It's up to you. It's right here. It's right here in Technicolor. And this trade like literally happened in the past month and a half, right? I mean, it's not that long. I mean, it's poetry what I'm seeing here. So there's 20, 30 of you on YouTube. Did I describe this correctly? Do you guys understand what I'm trying to convey to you guys? How insanely valuable this thing is? I don't know. Maybe I'm not conveying it correctly. This is why we have a marketing department, I suppose. But I don't know, Chris, you're here. Maybe you'll interact with me. Does this make sense what I'm saying? Oh, I love that. I want to build a product where we get to the point where you say, well, I can't trade without your product, Brian. That's where the capitalist goes, yay, I did it. It's America. But hey, you know what we're all working for? This actually was his caregiver. And actually, I was showing pictures of Lily on the way to work. On Thursdays, I go to work. In fact, actually, right after I'm done this, I go to work. But that's who I work for. I don't know whether there's my baby. Thank God, that's a million years ago. I guess that's about 20 years ago now. Anyway, that's who I work for. So all of this, if it can lead to me somehow improving Liam's life, then every moment of this is worth the effort. So anyway, by the way, he's 22 years old now. So yeah, that picture's a bit old. Anyway. All right. So there's your sales pitch. And I think I'm going to try and articulate that. If anything, what I wouldn't mind is, Chris, like I said, if you could tag the timestamp on that or something, I wanted to go into the video and see if I can use that little video clip. And the cool part about it is there's a number of different signals that have come up over the past, say, 6 months or so. I've been just watching this, letting it breathe, letting it develop, just to get the data. So when we do go into sales pitch mode, I can show you, see, if you just waited for this, then that happened. And, you want to make, I mean, why are you here participating in the market? Hopefully it's, well, I mean, the interesting thing about that, and this is an interesting sort of side, if anything, you have to ask yourself, why are you, and this is a part of our education program, why is it so valuable, is you can't finish the introductory question to why you're doing this with an answer to make money. That's not the end that we need. If that is the end goal of what you're doing here, then you're doing this wrong. Money should be nothing more than a means to an end. So, for our education program, right out of the gate, hugely important. We all work with trading plans. We all plan out why it is we're doing what we're doing. So a huge part of that is clearly articulating, why are you doing this? And the answer should be things like, well, I've always wanted a Lamborghini, so I'm doing this, and I'm going to keep doing this and working until I'm sitting in the driver's seat of my Lamborghini and driving off the lot. And if you can articulate specifically why you're doing this and what is the carrot at the end of the stick, and you can keep focused on that objective, then you can come at this and say, well, I'm here to, yes, make money from trading, but this is basically about me getting to that ultimate objective, because you'll never get there in one step. That's impossible. But like this signal, this might be like one of 10 steps, interesting sort of analogy of compounding. You probably all seen this before. But there's a funny little sort of, if you're playing with numbers, and there's a specific name to it, but there was this old proverb that if you took 1 grain of rice and you put it on this checkerboard right here, and you doubled the rice. So here's 1 grain of rice, here's 2 grains of rice, then here's 4 grains of rice, then 16 grains of rice, 32, 64, 128, 256, etc. And you go through every single square on the board, and there's basically 64 squares. How much rice do you actually get at the very last square of this process? Turns out it's actually more rice than has ever been produced in the entire history of mankind and ladykind, for that matter. So that's the power of compounding. And that's really the importance of working with a plan, is to understand that every single individual trade that you take is nothing more than just one more step along that compounding road. That's a very hard concept for a lot of people to understand. But, illustration purposes, and this is why I have this message at the very top of my Twitter feed, right? This pinned message is, in essence, this is exactly what this was. I took $500 and I said I wasn't going to risk more than 5% of that $500 on any one idea. And the goal was I wanted to turn it into 100 G's. How do you do that? Turns out if you just, go in, buy something, sell half on a double, and put the money back on the pile, maybe wait for the asset to come back down to the original buy price and buy it back. And then you have a second car and do it. And when it doubles, sell the second car and do it over and over and over and over. If you do this repetitive procedure, kind of like our little chessboard example, if you do this repetitive procedure over and over and over to nauseum, after a couple of years, then the numbers just get absolutely staggering. So it is doable. And actually, that's one thing that I was chatting with another gentleman yesterday. And I'm sitting here going, a little bit of sort of lack of confidence on my own part. Obviously, we're in the bear cycle. So, in these bear markets, ironically enough, what's your number one job? And I'd be curious. And actually, there's something weird going on there. Chris, did you realize it says chat disconnected? Please wait while we try to reconnect you. Unable to connect to chat. Please try again later. Oh, okay. So people are posting. I wonder why it's doing that. Oh, that's good. Well, gee whiz, what I just said there to all of you guys, every single one of you should like that, right? Because I just gave you the secret to the whole damn investing universe. Is try and find a model. Hey, there we are. We got 54 viewers. Hey, we're moving on up in the world. Hey, we're moving on up. Yeah, says David says, give the man a like. Come on, good. Can you help a brother? A YouTube brother? Anyway, I don't know whether I can use there. Yeah, okay. Anyway, now I'm just spinning in circles now. So the point of the matter here is the gift that we have brought into this world. It's alive, as I said, and it's kicking it. It's absolutely kicking it. It's so cool. The only problem is now you guys are kind of like, okay, well, is the market a buy now? Is the market a buy? And actually, there was one gentleman, Johnny Salmon. I'm not quite sure what he's changed his name to, though. I don't think it's Johnny Salmon anymore. Johnny something on the site. And he's often suggested that he likes to use the S&P 500 and the crypto breadth in sort of the same sort of vein to see whether it's time to invest in crypto. And you could make the argument that the S&P 500 and crypto are, to all intents and purposes, they're both risk assets. With this whole POS migration, frankly speaking, I don't know whether half of these POS stories might all just dissolve, which is such a shame. But it's more growthy. They're more acting like equity investments versus strict commodities. I think POW cryptocurrencies are beautiful analogies for commodities. I think the similarities are very, very close. So it would make sense that, if we're moving towards this DeFi world and moving more towards POS, the environmentalists and all that, they want to kill POW, which I actually think is part of the conspiracy to bring crypto prices back down to the cost of production. So institutional investors can go and rebuy this whole story at value. But nonetheless, if you do buy the whole sort of environmental angle, POW is Satan, whatever. That's another sort of anecdote to bring prices down. Anyway, point I'm trying to make here is, you can see what the Dow Industrials looks like right now. That's not a very happy picture. You could argue that the Dow itself got overbought. It has flashed actual sort of weak sell signals. And now you can see that the market is actually kind of rolling over here. If we got any kind of M-ish market structure top in here, in fact, actually, there was even one right there. You could make the argument that, we're probably going to go sideways here a bit. Now, the good part about this, and this is why I really love the way this worked, is, I think most people in the marketplace are looking for these killer trades, just these trades where you're literally sharpshooting bottoms and tops. So the great part about this indicator, and again, I'd like to somehow craft this into the marketing message, is yes, we have the market overbought, and yes, we have crossovers. But if we go and look at things like histograms through this event window, you notice that the S&P 500 and even the country funds, they're not both simultaneously ridiculously overbought. Right? We had one scenario there right at the very top, interesting, October 31st, where we did have the country funds go slightly overbought, but you notice, well, not slightly, very, but you notice the S&P 500 was nowhere near. In fact, look at that. It's a 65 on the medium term. So that's not that sharpshooter trade window that we want to see. And I tell you, man, when this comes in, it's just killer. So that's fine. what it means is we're sort of like cycle, midstream, if you will. But the market's not a rip roaring buy. Remember that was down here. Also say too, when we look at crypto itself, because it is, and of course, crypto's definitely under the gun right now. A lot of negativity. Now, the interesting thing is that the market tried to turn back up here. You look at the bread here is trying to turn. So I do think we're near some sort of pivot, but I just wonder if we look at our breadth indicator, the histogram, we notice is crypto oversold on the short term? Not yet. Is it oversold on the medium term? Yep. Are we oversold in the stock market? Not even remotely oversold. So I'm wondering whether crypto is going to be kind of like searching for that bottom. It isn't quite there. It's interesting how we've gotten some really intense FUD coming out of this weekend. I'm not quite sure if Grayscale here is going to balk under this sort of social pressure here. Ironically enough, if this is like GBTC, we had noticed that on Friday, and actually Eddie on the site, he pointed this out, that somebody was coming into the market here in this GBTC. This is a Grayscale Bitcoin Trust. I don't know whether this is the same people, Grayscale. I think it is. But the FUD is that somebody is really going after these guys. What I don't quite understand, there's two things that you have to be careful about this. Number one, these Grayscale guys, they never went to the big board. Notice this says OTC. That stands for over the counter. And unfortunately, and I even sort of pointed this out in this tweet, like if I had even suggested a year or two ago that somebody in the crypto space might actually be lying to us, you would have literally burnt me at the stake. But what you have to understand is that there is no legal obligation whatsoever for somebody who's operating a stock listed on the OTC or the over-the-counter market. There is no legal obligation for them to tell you the truth. And that's the truth. This is coming from a stockbroker guy. I went through the dot-com boom. I went through the dot-com bust. I remember there was this one little cocksucking son of a bitch who was shilling a stock, RSDV. Anybody who was with me trading back in the dot-com days, remember that. He was a little shyster. He was an OTC stock, raised a bunch of money, and the fucker just took off to Mexico. And he spent the next 2 or 3 years on the run, just spending all the money that he raised through his OTC vehicle. And there wasn't anything anybody could do about it. So don't kid yourself. There is a specific reason why these guys never went to the big board. And what I did find really interesting was heading into the weekend, somebody was selling this thing off hard. And like I said, Eddie on the site mentioned that. This is kind of a fun study. This is basically the spread between BTC. And keep in mind, BTC, if you have your coins off exchanges, if you have a ledger, hopefully it doesn't get hacked. But even if you take your addresses and I'm not quite sure how you do it, but throw it all on a USB device and bury it in the backyard, well, really none of that doesn't matter. It just doesn't make a difference. Bitcoin doesn't care what the hell this thing's price is. This thing might go off the board. They might go bankrupt. And I've seen plenty of OTC names go bankrupt in my time. Well, I've seen lots. This is not out of the ordinary. So I do find it interesting that, some people were sort of asking, well, this thing's trading at a massive discount to the Bitcoin, right? BTC traded like on Stamp and stuff like that. And is this something that you should chase after? And I have an absolute unequivocal answer: no. Because frankly speaking, you don't even know if this Grayscale Bitcoin Trice is even going to be on the exchange next week. You don't know. And there's no guarantees whatsoever one way or the other. Now, if you wanted to trade this thing, you got balls of steel. As you can see, it looks like when this spread is trending higher in Bitcoin's favor, you're best just to leave this thing alone. Now, the interesting thing is that can work for bottoms and tops. So here is a good example where market was, and you can't even really see it. So go back and zoom in on 2016 price action for that one. We'll zoom over here where you can see. So you can see we were trending higher and the market went parabolic. Now that was actually through a bull's phase. So rah, 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 insane bull. Then M comes in the histogram. The rate of change of this spread calms down. And it turns out that the market calmed down. But notice, and this is the interesting thing, is the spread starts to W out and starts to trend hard, right? And that's what this this histogram is. It is a rock or rate of change. Starts to crank up, higher highs and higher lows. Away we go. In this particular case, now we're actually hunting for a bottom. So this works in both bottom and top hunting. So rate of change is rocking and rolling. And I got a funny feeling what we're seeing here right like this is actually a replication of this kind of action. You can see where the histogram, and what's scary is the histogram is just now breaking out. Whereas, of course, this was at the very end of the move. Point here is you got to wait for the M in the histogram, wait for the rock to slow down, and sort of the volatility of the spread comes out, and it turns out there's your bottom. And you can do the same thing here. So market's trending higher. We're going parabolic on the spread between these two. There is the rock just absolutely going nuts. And then if you're like, okay, well, clearly, we've ran up and, the market will only go so far. Wait for the M. As soon as the M comes in on the rock, boom, that's the end of the bull, right? And that came in like basically right there, which on balance, I think was basically your top. That's basic. That's not a bad way to look at it. So market's been tanking down, and really I would say that the sell-off will be done, and we will have a base when we start doing this kind of thing. Right, so we got to see an M in the rock, and we got to see the spread calm down. Everything's sort of back to business as usual. Now, the scary part about this is this son of a bitch. Like I said, it's an OTC stock. There's no legal obligation to tell you the truth. You might find out, well, it turns out they never had any Bitcoins to begin with. It was all a fraud. I mean, I hope that's not the case. I don't want it to be the case, but you never know in this crazy world. Actually, I see most of my head is on the screen, but not much else. Maybe I move. And you got to see my fancy schmancy. A little better. Look at that. I've got my TRI hoodie. Tell you, you want a cool tchotchke for dad's stocking? Head on over to the TRI merch shop. Man, and it's so cool because now, like, I was in a meeting yesterday and everybody in the meeting had a different TRI shirt or hoodie or whatever. And I go and I pick up Liam and he's got a TRI shirt on. It's so awesome. This thing is, one of these days, this TRI place is going to go viral and all hell's going to frickin' break loose. And it's interesting because I had a really nice dinner with a site member yesterday. And he's like, Brian, I can just feel it in my bones. Something big is about to happen. So you just got to keep your nose clean. Just keep on keeping on. And the products that could literally change the face of investing, the way this whole universe, like literally, this is game changing, right? If we actually can convey this message that, do you want to make money from trading? Well, it's really simple. All you got to do is just wait for the breadth indicators on the short and medium to get nice and washed out. then just hunt some bullish market structure on your breadth indicator, and away we go. Man, if we can get this message out, this TRI place is going to go nuts. So I thought it was just interesting. Unfortunately, we are in the crappy part of the cycle, back to our fun little image. So and sort of walking our way down. Remember, we talked about Colin and his pump chaser zones and Ray Burchett and all that. WD Gann and expects 50% retracements at any given point in time, and all that kind of fun talk. So we've gone through that. We failed. It's kind of funny how Mr. Novogratz himself was the guy who was like, well, this 30,000 area should be the floor. And then, of course, Luna came along and sort of embarrassed Novogratz. Was that intentional by the 1%? I don't know. It's tough to say. But I'm sure Michael will get through this. So that's kind of quelled all those people that, hey, we're still a bull. And then, remember magic, internet money and all that kind of stuff, that all evaporated. So then we're sort of like, okay, buy the F and dip, how that goes. That's all these people. They've been burnt now. They're probably exhausted on these moves, right? They bought this dip. Oh, I'm so smart. They bought this dip. Oh, maybe not so smart. So they're getting kind of exhausted now. Snipers, good old mountain man. You can see how Bitcoin stabbed into Brandon's level here. And this is what a lot of pit traders do, right? They'll trade that mountain man level, and whatever this bounce is, that's their bread and butter. They make money day in, day out, just blindly buying that 61.8. In this case, you can see it rally back up into here, and that was about as best as it did. And then we continued on their way. So he would be like, well, I'll you could probably throw on like a fast moving average or something on here. This is a weekly chart, so it's a little bit longer term. Maybe what I'll do is I'll put like whoops, that's not what I want. Let's put well, actually I'm wasting time. Anyway, point here is at least now we can start to think that the pros are going to start to pay attention to the market. Doesn't necessarily mean it has to bottom, but there they are. There's Brandon. You can see this dip into now the bottom of the reload zone. Brian, he loves that 78.6 fib. Going sideways. Cute little consolidation in here that got me excited on the long side. I took that long shot, and you can see how quickly, boom, sorry, Brian, you're wrong. Get that out. And this is probably this type of environment that, the sharpshooter traders are going to be hunting their setups. If this does happen to pivot off here and we have a big rally, then they all look like geniuses. But odds are we're just going to keep bumping along, heading sideways until we actually do start Wing out in earnest. And things like these moving averages, they start crossing back bullish. You can see we're nowhere near that. So yeah, kind of like sniping, hunting little bottoms. In fact, actually in a few altcoins, I went in sort of hunting for bottoms and buying against bottom ends of the ranges. A couple of ideas worked nicely. And then a couple other ideas didn't work at all, and I'm stopped out. And it's a trader's life. Point here is that now that we have broken through these lows, I actually think now, and of course breaking tons of hearts, if anything, it's kind of good that this didn't go on too long like this one, that it broke a lot of hearts, because you see that we actually got down there into February of 2018, and it didn't really start breaking in earnest for 41 weeks. So like I said, the public had convinced themselves this has bottomed, and it had not. This situation here, if anything, we have to be thankful it resolved itself in 22 weeks, about half that time. I actually think that this cycle, other than the fact that we didn't have the Willy bot that took price to absolute insanely high levels, if anything, thanks heavens we didn't have that. But I think this cycle, to me, it reminds me a lot of the when I started the conversation with you guys about RJ or RJ's Ron Jeremy guy. I actually think that this cycle looks a lot like this cycle. And if somebody was going to ask me, what do you think, sort of where we are? Interesting that I had this kind of image on here. I actually think that this is probably, and it'll be cool. Somebody hold me to task, right? Let's come back in about a year's time and let's see if this bottom looks something along this lines. I think this is exactly how it's going to look. So you'll notice that there was a little bit of a rally, October, kind of the same sort of thing as what we saw here recently. They goaded, Brian took a long shot off of the bottom, market's pointing up, and then bam, bitch slap, stopped out, and then of course just a cascade lower. And this didn't actually bottom until the second week of January. It's just a train wreck. And I have a feeling this is our fate here. This is, and I even put out in like sort of tweets and stuff. This is the absolute hardest, most difficult part of the cycle. I mean, it is so easy to make money in this space through this part. You have to be a fool not to be able to make money through this. But the sad part about it is what happens 9 times out of 10, same thing here. 9 times out of 10, what happens is people do make a lot of money through these big pumps. Then they end up through the bear market just giving it all right back. And I think that's exactly what's happened here. I know a lot of people made great money on that Luna. Of course, they became lunatics and they didn't take profits. They bought more. Oh, Jesus. And then unfortunately in this space, you guys kind of got hoodwinked with this whole APY stuff. So it was like you were convinced to not take profits. Well, the APYs are just going to be so awesome. You might as well go lock in and get that 11,000% return. And that, my friends, I think, and I warned when this happened, I think that was a trap. This Sam Bankman fool, I think, this was a very, very well orchestrated trap that the whole bloody world fell into. It's so sad. And it makes perfect sense because this is the fear asset proxy of this cycle. Gold was the fear asset proxy of the millennials, or excuse me, the baby boomers cycle. And the advent of commodity contracts and commodities trading, that all came into existence in the late 70s, early 80s. Captured the imagination of that whole generation, and so much so that they're still long and they never sold. And I remember one guy that I used to prospect back in the 90s, and he said, Brian, I bought my gold at $700 an ounce back in 1979, and I ain't selling it until it gets back to there. And it did get back to there in the 2000s, but $700 gold in the 2000s was not the same $700 gold in the 1970s. Anyway, point here is that through the greed cycle peak, that's the stock market, everybody got destroyed when the NASDAQ rolled over. There were some companies that survived, so that's encouraging. Let's see where I can show you that stuff. Really, you might even argue, this is the Dow. But if you look at the NASDAQ, oh boy, it was a disaster. I don't know where to show you that. If we just go NASDAQ, might be able to get a big index. NASDAQ 100. Let's see if this goes back far enough. Yeah, there we are. And actually, it's interesting. I saw somebody over there on YouTube say, where are we in the market psychology sort of phase, right? So if we go Market psychology, of course, Wall Street. I think I wasted like 5-10 minutes on Friday's video just hunting for this image on YouTube or on Google. Oh, look at that. It's all over the place. Awesome. Cool. Okay. So anyway, there's the image. And if we go back to the NASDAQ, great, remarkably, you can see very, very similar. Right? I mean, if anything, it almost looks like all they did was they just cut and paste this image, which is kind of funny, eh? Well, you could have put a little bit more work into this, guys. You just blatantly copy the NASDAQ. But anyway, there was, I think, Peter Brandt. He put out a tweet recently. I think it was him. Somebody find it for me while I'm blabbing away here. And he overlaid the Japanese stock market from the 1980s, the US stock market from the 1920s, like the Dow, the NASDAQ, and Bitcoin, and all of them look very, very similar. And interestingly enough, gold from 1980. So what you have to understand is that this was the part of the generational cycle where the baby boomers were basically at the top of their game, right? We call this the greed cycle peak. So baby boomers were making the most amount of money for their entire generation. They were all doing it in unison. Stock market's a leading indicator. NASDAQ is the ultimate growth proxy. We used to joke back in the 1990s, their commercials were the NASDAQ, the stock market for the next 100 years. So point here is growth, 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 growth. We hit that big psychological event window, year 2000, Jupiter, Saturn cross. Oh boy, all the celestial guys get all excited. 17 and a half year fear greed cycles, all that kind of fun stuff. Right into this sort of 2000 peak. And you can see, wow, what a peak. Meltdown on the other side, interestingly enough, primarily driven by a rising interest rate environment. What a surprise. That sounds a bit familiar. And the growth proxies all came back down to earth. And, the sad thing is this is incredibly cliche, people. So if we go gold from the 1980s, this is now the what were they called? I think they were called the greatest generation. I can't remember. Anyway, so there is that same image, right? We can even, I suppose, take this image here and plunk that now on the gold chart. And hopefully you see a similarity there. So this was the greatest generation, the people that fought the Second World War. This was their fear cycle apex. Gold as a hard asset, want to get out of the system. Socialists are all spending money like drunken sailors. Of course, we've all seen lots of talk of that. Go watch your George Gammon videos. He loves to talk about, what does he say? Your drunk, insolvent Uncle Sam. I think that's the reference that he uses. So anyway, pretty similar type image. This was just a blatant copy of the NASDAQ, but nonetheless, this was now the, I think we want to say the greatest generation. It might be this, they might have called themselves the silent generation. I can't remember. Anyway, no, actually, this is the greatest generation. The greatest generation's parents, they're the silent generation. So anyway, so greatest generation, this is their fear peak. So the point being that greed cycle, so remember, greatest generation, they hit their peak earnings years in like the mid 60s. So they don't even show you this chart over here. Thanks, TradingView. And, that's half of the problem in our financial services, our sort of financial education. Like, why on earth can't we get the data for gold going back here? It's a little bit suspicious. Anyway, So this is a fear cycle, but notice the behavioral pattern through these cycle pivots. It's kind of the same thing. So there's gold, and as we said a moment ago, there's the NASDAQ, and it's almost a carbon copy image. What you should all take from this is that, people talk about boom bust cycles and when you're going to get rich in the stock market and all that stuff. Well, I hope you all are seeing that basically about once every 20 years, there comes along these crazy ass blow off cycles. I mean, it's stunning how cliche this stuff is, people. This is, again, like, why do you want to take Brian's course? I want you to take the course so that you understand that the behavioral pattern of human beings through their lifespan is actually very predictable. It's just you have to understand the context of where we are in these big cycles. So, having said that, I actually think that, and as I said there, I don't think guy's name is like Wilkinson or something like that. I remember this is the guy when I first got in. Well, no, when I first started sort of working in the industry in earnest, coming out of university, right here, I used to prospect for a big wig broker dude. This guy I used to call, and he said, Brian, I bought my gold up here. Like, he literally bought the top of the market here, and I ain't selling until gold gets back to there. And he, eventually he was vindicated, and gold did actually end up going much higher. But, the problem is that these stupid banksters, the way they screw us over, clearly $700 gold here in 1970 does not have the same purchasing power as 700 gold here in 2006. It's not even remotely similar, right? That's, and I actually don't know what happens when we do this. Actually, I think I know what does happen is that the chart will be cut off when the quantitative easing started. And keep in mind, Alan Greenspan actually started the whole quantitative easing back here in long-term capital management. I just spent a lot of time on the Friday show with the kids on the site talking about long-term capital management. So you could actually make the argument this is where quantitative easing actually started. But anyway, that's here nor there. So the point that I'm trying to make with all of you guys is, I hate to say, and you're not going to like me for it, but nonetheless, it is what it is. Bitcoin and crypto has a very, very similar behavioral pattern. Like, I didn't already know that. So BTC, USD. The good part about crypto, though, like the one redeeming feature, and maybe you like this, maybe you don't, but the one redeeming feature about crypto is, wow, do they ever rip the Band-Aid off hard and quick? Boom, let's get this shit done with now. And you hopefully see that, well, it sure looks to me like we're just going through these normal bull cycle and bear cycle pattern. Really very normal, business as usual. And the interesting thing about this is that, what do you think these Western governments, what their attitude now is? Are they austere? Are they actually talking about like lowering spending? Are they talking about you know what? We really need to defend the value of our currencies here because we're completely diluting the crap, and we're kind of screwing our grandkids and our children's future. Do you hear anybody in politics in the Western world talking like that at all? I don't. But I would make the argument that for the Bitcoin story to become irrelevant, we have to start hearing that kind of talk. And we don't hear that kind of talk at all. I do believe, and actually somebody was asking about this, and I think it's one of the questions. So maybe we should just jump right into the questions. But somebody did over on YouTube ask, what do you think about that? Yeah, TS is, where do you think we are on that market psychology chart? You see this right here, eh? Gee, doesn't that look a hell of a lot like this? It sure looks like it to me. And then, of course, and I love showing you guys this. I mean, the great part about this is this shit never changes. I've been saying the exact same message through this whole damn thing. If we look at cost of production, so try and remember this image. In fact, man, we might as well take this over here too. If we go this to here, notice there's that there, and oh, hello. So we're actually now coming back down into what it actually costs to make one of these Bitcoins. So, we'll throw that image on there. Oops, hey, where'd it go? Look at that. They're like, no, you can only put that image on so many charts. And then we tell you to go to hell. Oh, let's try that again. Come on. Whoop, and it's gone. What the hell? It won't let me do it. Must be doing something wrong there. Anyway, I'm not quite sure why I can't post that. But anyway, let's do it over here. Maybe it'll work here. And it's gone. What the hell? Did it again. Oh, well, you saw, I tried to show you. But anyway, the point here is down into value, cost of production. That is how you value commodity assets. I tried to tell people, don't go and buy Bitcoins up here, values down here. And people told me I was a stupid fucking idiot. I mean, that's the irony of this damn game. Nothing really changes when it comes to trading commodities. The problem is that you gotta, I don't want to be insulting. The problem is that the human emotions take over here, and logic just goes right out the window. Just so shame. Anyway, okay, so back to our cycles. I kind of like the idea that we're here, which is bothersome because what this is suggesting, of course, and it is happening now, is that we are going to make a new low here. If we follow the NASDAQ's pattern, I don't know whether we follow this. This was the NASDAQ. Hey, look at that. The hot chicks are on the call. I think as soon as you hit like a certain level, the algorithms kick in. So everybody say a big thank you to XX69BIZ. There's new A dating online. What the hell does that mean? New A dating? Is that like a name of a dating service? XXX69BIZ, you, my friend, suck horse cocks. Suppose that totally demonetized the whole platform, but it just goes to show that people don't really care about shameless shills that get you to spend money on probably, this is probably going to try and steal money from you. But if you say the wrong word, then boom, you're demonetized. Anyway, so I told our little buddy there to go screw himself. And actually, I don't know. See, the thing is he's going to jump on a different header. We'll hide that user from the channel, but my hunch is he'll be on in a different alias shortly. Anyway, Brian, just having fun. Hey, there you go. All right. What's that? Alligator? I've never seen that before. Anyway, cool. Okay, so somebody asking me where I think we are in the cycle. The good part about it is we're finally through most of the crap. Like if we go back to where's that fun image I was showing you to start off the conversation. Hope I didn't get rid of it. Where did it go? Must be a different window. Oh yeah, here we are. It's over here. Oof, there we go. So the narrative of these cycles is I can't stop you from buying, which is so sad, right? Because the public just throws their money away. Take a screenshot of this, right? Then the narrative is, okay, well, if this is still buy the effing dip, you know how that goes, then these should hold. And, guys like Novogratz come out, we should hold here. Everything's fine. We did hold, then they took it to new highs. They tried to hold it again, and then failure. So now we're in a new phase of the market. Now this phase is the sharpshooter traders are going to come in and do their thing, but we're in a bear market and the public is slowly having their hearts just slowly ripped out from them. First Luna, or maybe it was first Magic Internet Money with Danny. I suppose that was a harbinger. They always say these things come in threes. So first Danny and Magic Internet Money, then Do Kwon and Lunatics, and now I don't even understand this Sam Bankman-Fried guy. It doesn't make any sense what's going on here, unless, and I hate to say it, but I actually think he's a puppet. And I put out tweets. Somebody refute this. But I put out tweets recently that actually he was just a front man. He was kind of like a stoolie. And this guy is actually the guy driving the bus from behind the scenes. And it's interesting because people are trying to hold this guy to account, and all of a sudden he's mysteriously going and scrubbing the internet of any sort of signs of anything. All his social media profiles, everything is being wiped out. I'm sure he's trying desperately to cover all his tracks. And that's the real tragedy of this. And I remember I did a weekly crypto show with a guy Hard Made Easy on the site, and he was a fan of all this kind of stuff. And I kept asking him, what is it with this Sam Bankman-Fried guy? And he'd be like, "Oh, he's such a lovable guy. He's so sweet. He's so," and it turns out that actually he was the front man. In fact, they would call him in circles, they would call him the confidence man, right? So ironically enough, like, doesn't he speak perfectly to like the crypto generation? I'm not going to wear a suit and tie to some fancy thing. I'm just wearing track pants. I'm not going to get a haircut. Maybe I'm a bit overweight. I don't exercise. I still live in mom's basement. I doubt he did. But anyway, you get the idea, right? And just for the record, right? A big connect! There's nothing new. Every cycle has the same crooks. They have different angles. I'm actually surprised that and I don't think Sam is the guy driving the bus. I think it's this guy. So if you were going to have like a big connect kind of meme, it should be on this guy. And Sam, unfortunately, I think was just basically a puppet. And actually these guys, they're like super smart, investor trader dudes guy. And they just tearing this guy's a new a-hole. And of course, these guys are the smart guys in the world. And they're tearing apart these guys, which really sucks because this guy historically is a horrible investor. He's like driven 3 or 4 companies into bankruptcy, and he just got fucking ass lucky getting named to that Dragon's Den show. But like these guys here, these guys are the smart guys in this space, and they just tear that O'Leary guy apart. Just like, oh my God, this guy's such a scam. So anyway, the soap opera goes on. I guess just the point that I would just make, coming back full circle to my original comment, that, honestly, that there's really nothing new going on here. It's stunningly cliche, except I lost the damn image. It's stunningly cliche how Brian can twist himself around in circles and he loses all his charts. And now what the hell am I doing? What the hell? I'm loading. Actually, Chris has got me shopping for new computer parts right now. So I think it was this one. Is it this one? Yeah, here we are. All right, this. It's actually incredibly cliche. But, now you need to understand, where are we in this cycle? This is the predominant theme, and it sucks. And ironically enough, I wrote this about a year or two ago. Couldn't have described what was going to happen better. The public is, if they haven't been destroyed yet, they are slowly getting destroyed. And interestingly enough, I might make the argument that, the Luna guy saying, hey, 20% APY guaranteed. Why have your money in the system when you can get, I remember people close to me were like, why don't you put your money in this? And I'm like, dude, if it seems too good to be true, it probably is. And it turns out that those words saved my ass. So not only is the public getting destroyed, but because they actually went and bought what they thought was crypto, and frankly speaking, I don't even know whether these, highly leveraged lock-in 11,000% APY kind of, this isn't the POW, not your keys, not your coins kind of story about crypto that I got involved in. This is some weird ass tangent that this whole story has been morphed into, which is such a shame, because now when somebody asks the public, well, what do you think about crypto? Now they're going to think this idiot. And I don't mean to be rude, but hell, I've probably been in crypto. Well, this idiot, right? They're gonna think this idiot. No. Unfortunately, nobody listens to me. So it's great that you guys are all here, but we haven't made that public splash yet. Maybe one day soon. Who knows? But when the public thinks crypto, sadly, they are going to think this guy. This is what they're going to think is quote unquote crypto. And actually, I think that that's the furthest thing from the truth possible. What crypto really is it's this. And ironically enough, we're just now coming down into the area where if you were a serious investor in crypto, now is when you actually want to start getting serious about investing in crypto. How ironic, eh? And the public, of course, won't touch it with a 10-foot pole now. But now is actually when you should be getting interested. So what you also have to learn here, and I sure hope you guys are getting this message. What do you, okay, first off, and let's just do a poll. Let's see if we can get some sort of consensus here. Do institutions buy up markets? Would Goldman Sachs come in heavy on the buy side up here? Let's see if we can, put our thinking caps on, people. Don't bullshit yourself. It's your money. You better learn from this. Hey, my German bodybuilder. The rational investor just now. Oh, what did we do? Oh, did you do a poll over there? Is that what that was, Chris? Oh, cool. Hey, 100% says no. There you go. So Nuri answered. Do institutions buy up markets? And of course, this is part of our education program. One answer. God, how do I get through to you people? Oh, good. Okay, good. So it's not just one person. All right, good. And they all said 100% no. Excellent. Okay. Well done. Well done. Mr. JP Morgan himself would be proud of you. You can all officially get a job as an institutional investor at JP Morgan. All right. So if they don't buy up markets, what kind of markets do they buy? All right. So now next your poll question. Let's see how we do here, Chris. If they don't buy up markets, what kind of, and how do you do that as a yes or no? Yeah. I don't need to work you too hard, dude. You're awesome. They buy down markets. It's what they do. In fact, actually, we even have an expression in our teaching, right? Institutional fingerprints. Ironically enough, you can actually see exactly where institutions have bought. It's, you can only see it in hindsight, which sucks, but, there's the bottom of the market. Aside from our little cost of production model, let's go over here, right? So here's a nice simple one. Bottom of the market, we can clearly see in hindsight exactly where the bottom was. I mean, it doesn't necessarily mean that we bought it, but we can see where it is. And since we know institutions buy down markets, they don't buy up markets, well, guess who basically came in here and was buying and literally stopped the selling. Every time somebody wanted to sell and push the price lower, somebody came in and bought up all that crap. Somebody must have done that. And you can see after the fact, gee whiz, yeah, I guess the people that did buy here, they knew something. fact, remember there was one guy that I used to work with a few years ago. I was so proud of him because he actually forced himself to come in and buy in through here. So in essence, Kvark literally bought the institutional fingerprint, especially if you look back after the fact. Who is it that put the floor in the market? Turns out it was Kvarkinator, that bastard. I miss you, Kevin. Sure hope life's treating you well. Anyway, so the point here is, and usually you can only see this after the fact. It's not really something you're going to really be able to use in real time. But we can clearly see where somebody came in and said, all right, no more down, you go up. Now would be a good time to insert ads. Let's not do that. I don't think people like the ads, you know. And frankly speaking, I've got one of these Roku TV things, and I go through the YouTube channel on there, and oh god, the advertising is ridiculous. I mean, it's to the point where, you know, YouTube, if you're watching this, I don't even really want to watch it on TV. It's just too much advertising. It's even worse than commercial television now. Go figure, right? Anyway, so the point of the matter here is there's a bottom. Suppose you could argue there's a bottom. To a certain degree, that was some sort of bottom. Somebody stopped this going down. I think what you really want to see is you want to see market structure where somebody said, okay, let's get in there and sell some more and push. And it pushes against these lows, but it doesn't break it. And then you turn up and you go through there and you get this big honking W. So now we know that was definitely where the institutions came in and stopped the bear. So institutions buy down markets. They're the only ones. It wouldn't be the public that's buying through here. Sadly, the public, they all buy up markets, and they're actually capitulating and they're selling. And you know, oh well, the U.S. SEC is going to come after you with a scalpel and cut the bitcoins out of your crotch. What? Sell it? Get me out of there! I don't want that. You know, whatever. So, and that's the sad part about the psychology. So if that's the case, then we know that the public was buying up here. Right, all the guys who say, well, this time it's different. All the guys who say, well, technical analysis doesn't matter. They're the people who are buying up here. And you know what's so sad is, you know, people think, well, that Michael Saylor, he must be an institutional player. And I would say no. Actually, no. He's not an institutional player. He was just a guy with an opinion through these blow off bull parts of the cycle. And oh, by the way, and this is the crazy part about all this, is that Michael Saylor actually has a history of shilling right at the top of the market. You almost think, I get the impression that he's kind of like this Sam Bankman-Fried guy. I think he's a stoolie. Because ironically enough, you know, what we just showed you there a moment ago. Where did it go? I had my 3 charts there with what did I do with it? Balake? Oh darn. Anyway, I had those 3 charts with the gold and the it's not that one, is it? No, not that one. Maybe it's maybe it is this one. Yeah. Okay, so it is this one. But all my little images, did they all get wiped out? Oh no, there we are. Okay, so he's back. Okay. What the hell was I talking about? Jesus, totally lost my concentration. Oh yeah. Saylor. There's that crazy ass Saylor right into that great fear cycle apex. Remember gold 1980. And the worst part about it is this guy has a history doing this. When did we say the greed cycle apex is? Maybe you don't need to do a poll. Just answer it if you can on YouTube there. Let's see if you guys are listening. When was the greed cycle apex? Baby boomers peak? How did people act? .com boom? Anyone? No, not 2009, 2000. This is the greed cycle peak. Remember I just showed you this? All right. There is the fear cycle peak from 1980 for the greatest generation. So the opposite of that, the greed cycle peak, that was the NASDAQ in the year 2000. And that's where they get this market psychology image from. So what was Mr. Saylor doing in the year 2000? Well, actually, he was shilling his stock like a shameless, kind of mindless marketer into that year 2000 peak. Can you see that? So fascinatingly, this was all the dot-com boom. And my hunch is if we went and found like public video and stuff, he was probably saying things like, on Friday, level 1 program, I teach everybody the story of Nortel Networks. And it's quite shocking, right? Because Nortel Networks was the dot. You could argue that Nortel Networks, networking stock, the building out of the internet, it was that cycle's sort of Bitcoin. I mean, and really not really, Bitcoin's not the right word. Luna, maybe even Ethereum. I don't know. But the whole selling feature of Bitcoin is the fact that it actually has some intrinsic value. And the tragedy of stocks is that they don't have intrinsic value. In fact, I remember it's kind of funny, this image. My first sort of job in the real world was selling fax paper over this telephone, which was a horrible fucking job. And I used to have to come in and see this goddamn Nortel Networks phone every fucking day. And I absolutely hate it. Look at this. See, people are enamored by this stuff, but this is garbage as far as I'm concerned. Sophia, go get a real job. You're probably not even a human. Anyway, what I really wanted to show you was, isn't that interesting how, look at that, they won't even show you the chart. There is the story of Nortel Networks. So I might argue that, a guy like Michael Saylor and GBTC, considering it's OTC, like stories I told you about OTC stock. And this was the ultimate expression of that dot-com boom. And unfortunately, the subsequent bust. So that's the dot-com boom right there, right? Let's bring Sophia to the show. So what's ironic about this is that I think that this is the dot-com boom, that growth cycle peak. I think a lot of crypto names look like this. They were the classic fear cycle proxies through this. And of course, there's also a lot of stocks in the stock market like Amazon, Tesla, these really fluffy names that really are not trading anywhere near value. They just, we get into the end of these long 20-year cycles, and there's just so much momentum. There's so much inertia behind them that this is a runaway train. And I hate to say it, but, Mr. Saylor, he has a history of doing this. And I'm sure there's probably people that they started to see the market break there and they went, oh, fuck, not this again. Because it's remarkable how cliche this is. It's almost identical. The only difference is he was, I don't know, for one reason or another, probably because he was new on the scene, he was able to take his stock to the absolute moon through this. But there were probably a lot of shareholders that were still holding the bag. Remember, like I told you, Mr. Gold Investor, I ain't selling until I see $700 again. Well, probably the same thing here, right? They bought it like a $1,400 split adjusted basis. So when this thing finally did rally up into there, they were all like, oh, phew, finally I get to get the hell out of this damn thing. Like this is the perfect analogy of the guys sleeping on the couch. Have any of you ever heard of me talking about the guys sleeping on the couch and they want to get off the couch? They made like a speculative decision and they're just going to wait. And then finally they got released from sleeping on the couch. So the only problem is that the wife actually divorced them back here and they're living on a couch on a trailer park now. And of course, $1,300 in 2001 dollars isn't even close to $1,300 in 19 or $2,000. They're not even remotely the same. Anyway, I do find that kind of amusing that Mr. Saylor is just basically history repeating itself. And I don't think that, I mean, you look at him, he looks pretty gaunt. I don't think he'll be able to survive another 20 years. But my hunch is that this thing's probably going to bump along, and then 20 years from now, he's going to do it again. So, what a great analogy of market cycles. That's incredible. So, anyway. Okay, you know what we really need to be doing here today is we need to be answering student questions. I don't know whether I helped you with that long rant, but sure threw a whole bunch of fun things out there at you to think about. So where are our questions? Boom, here we are. Okay. Skyfire Francis, and we'll just call you Francis, right? Because yeah, he sent me a message saying, Brian, you can just call me Francis, by the way. Okay. Hi, Brian. I just finished watching 1115 DB. As usual, excellent analysis on the timing of the commodity risk asset cycle. Oh, okay. Thanks, man. Appreciate it. However, I do question if the 1980s fear-greed cycle transition is a good comparison for the times we are in. For the following reason, 1980s US public debt to GDP was 35%. Today it's 140. In the 1980s, World War II vets were running the show politically, with baby boomers entering their prime earnings years. Yeah, starting to enter, right? You would say the millennials are similar. Today, the boomers are running the show and millennials are entering their, okay, yeah, so yeah, there's your sort of your comparison. The generational dynamics are quite different. Yes and no. Geopolitically, we have a superpower, the US, no longer willing to maintain Pax Americana. Really? I don't know. I might disagree with that. Whereas in the 1980s, the American empire was just hitting its stride as the global guarantor of peace. Okay. Keep in mind, 1980, the Soviet Union was actually at its peak. The United States looked really, really bad through the Carter years, getting over the Vietnam War. So I might disagree with that. Mr. Reagan came along and he like dragged the United States of America back into militarization. That was a definitely a political push on his part. Anyway, given these differences, wouldn't it be more appropriate to compare the coming greed cycle to the GI generation cycle? Yeah, what do we call them? I mean, do we call them the silent generation? I don't think so. I think that's the generation before them. I think they were called the greatest generation, but GI generation, we could use that. A la 1940s. In your opinion, how will the factors I listed affect the characteristics of this next greed cycle? So, for whatever it's worth, and Francis, you've been around here a while. So maybe in that particular daily brief, I sort of focused in on kind of what I was showing you, the most recent fear and greed cycle apexes. But to be honest with you, Francis, I agree with you. Because I always show you guys, and I loaded up this chart ahead of time just to make sure that I didn't have to go and find it here. But I actually totally agree with you. And this is where I think we are. And I think the similarities are absolutely shocking. Do you find it interesting that if you go and look in early 1940s, the annual inflation rates are almost exactly what we're seeing today. I mean, they're stunningly similar. At that point, we had coming out the other side of the Great Depression, we had this concerted, and then of course the end of the Second World War, we had this concerted effort to remake the whole global financial system. And actually, I was quite shocked. I don't know whether I can show you this or not. What was it? Somebody was passing around on the site images of now, Klaus and all those doofuses are all talking about world government now. And how they're, this year, the World Government Summit and all this crap. So in a weird sort of way, this to me reminds me, and Klaus and his Great Reset bullshit. This reminds me a lot of where the hell did I put it? It's over here. This reminds me a lot of this here. Bretton Woods, and Bretton Woods was sold as sort of a move away from the trade system that was prevailing here. And you could make the argument that the Bretton Woods restructuring of sort of the world trade system with the United States, sort of the world hegemony sort of being established, the banksters were more than happy with it. Politically, it worked well. In fact, what was actually interesting about Bretton Woods, I learned about this recently, was actually the banksters started off hating this idea. And Roosevelt actually had to go to the American public, and they did this massive PR campaign to sell the idea to the American public in sort of rural America first. And then once they sold the idea to rural America, and they literally had like children's advertising campaigns, or in like schools, teacher says Bretton Woods is a good thing. Tell mom and dad Bretton Woods. I mean, just blatant marketing to like school kids. So if you think politics are bad these days, man, they're nothing in compared to the way politics used to be. There was nothing was off limits 100 years ago in politics. So anyway, I see a lot of similarities with like Klaus and the Great Reset that he's all going on about. I don't know what the hell that ultimately will look like, but I think the similarities between the Roaring 20s, the Booming 20s, and why did this even happen? This doesn't actually even make any sense, other than the banksters actually came into existence right here. 1913. And of course, they wanted to take over the system. So the very first thing that they do is they extend credit to everybody. The whole market just goes absolutely insanely booming higher. The bubble pops. And then through this period, the banksters cut off credit and just said, no, we're not lending money out to anybody. And the whole fucking thing collapsed. And, the politicians that were in power at that point said, well, if you go and speculate in the stock market and the stock market comes back down to earth, well, you're gambling. So you lost. That's what usually happens when you gamble, is there's a winner and there's a loser. So the problem is, of course, is that the American public said, hey, well, no, actually, we don't like that answer. There's no such thing as American losers. Americans are winners, and they always win. So you better do something to make sure that we win. And so now we live in a world, and Roosevelt basically went to the banksters through here and said, look, you do whatever the hell you want to do. Just turn those fucking credit spigots back on. And mysteriously, wars all of a sudden developed out of nowhere. You can make the argument that Hitler was actually put in power by the American oligarchs and the American banking machine, right, to try and dislodge the Soviet Union, which turned out that the Soviet Union was put into power by the banksters because the Romanovs wouldn't let the central bank into Russia. So it's so ironic how history works that way, eh? Anyway, so the point of the matter here is that the similarities between this generation and this cycle, also too, if we think like 80-year money cycles, they're almost identical. It's shocking, the similarities. So I think what ends up happening is that, of course, Jupiter, Saturn cross. Hopefully you guys have all learned about this. I mean, holy moly. And, for the rest of my days, I'm only 50. So I should be still alive the next cycle. For the next 20 years, you are going to hear Brian, and hopefully there will be some of you that stick around that long. But when you see me sort of gray, and I'm in my 70s on social media, probably doing these same damn broadcasts week in, week out, we'll be talking about the next big cycle pivot coming up. Don't get sucked in by this idiot. I can't believe how so many people in the public got screwed by these people. Just outright stupidity. Anyway, it is what it is. I mean, of all people, this guy's been in this business for like 20, 30 years. He doesn't know how the hell you value commodities. Drives you nuts. So to answer your question specifically, I would say historically, we are more in the, this is where this kind of stuff kind of pisses you off. Like, why can't we get the gold price from back in the 1930s? Is there a reason why maybe the central bankers, central planners, Joey Diamonds? Because really, keep in mind, you think Chair Powell is the guy who's in charge? Chair Powell works for Joey Diamond. Joey Diamond's the guy who's in control of all this, not Chair Powell. Chair Powell is an employee. He's a front man. But anyway, I get the impression that the powers that be, they don't want us to be able to analyze gold prices from back in the 1930s. I think that's a concerted effort. And unfortunately, sites like TradingView, they're just, they just say, well, this is the data available, so that's what you get. Well, who's making the data available? Well, it's S&P and, COMEX and all that kind of stuff, but anyway, blah, blah, blah. What's a really cool image, and I wanted to show you guys this because I think this really helps put sort of everything into context. Here is those fear greed cycles, and you can clearly see the pivots in the market. It's not rocket science. The problem is here again. We had Ronald Reagan come into power right here, and he's the guy who sort of said, okay, well, the United States of America, turns out we're actually a pretty good country militarily. And so as of here, the very first thing that he did, and I remember this because I used to live down in LA, is he insisted that the United States have a 300 ship Navy. And that insistence, the Soviets went, oh, crap, how the hell are we going to keep up with that? And you might argue that sort of led to the Hail Mary by the Soviets for the Red October project. And of course, movies were made out about all that kind of stuff. So ironically enough, there's actually more truth to that than you'd be surprised to learn. But the point here is make America, what was Reagan's line? It'd be interesting to see if anybody can remember. Anyway, this is sort of that the baby boomers greed cycle, but we can't see anything bad happen. That's cool. So XAU USD will give us a little bit more data to look at. Actually, it might be interesting. Just I don't want to. Well, here I don't. Let's copy that. XAU USD. See how much data we get here. Hey, there we go. Oh, nice. Woo. Wow, that's weird. There's 100 years of data right there. That's a bit odd. So I guess they sort of like compressed it. Anyway, so there's 1975. So that's the data that we're missing right there. But anyway, thank you for that suggestion. I'll take that into account. If anything, this is a bit bothersome, eh? So here is that fear cycle peak, and we always say Fear cycle means that there should be a preference for hard assets, commodities. These were a relatively new product in the late 70s, these commodity contracts and options. But, to make it really simple, what are you supposed to think if you see the market smiling at you? That's a pretty darn big smile, especially if we're going to go through one of these big sort of Jupiter Saturn cross events. That is like generational pivot shit. So fast forward to today. I think you can actually make an argument. There is basically one, and I always made the argument, and this is where I kind of look a little foolish, but I believe that the cycle was actually like right there. So it's interesting how we're on like equal sides, one side or the other. I actually thought the cycle pivot was there. So this the cycles go here to here to here. So hopefully you can see that's about 20 years roughly. Interesting how we have, what are we supposed to think? Excuse me. If we see the market smiling at us, that can't be a good sign. It's interesting how the market started to smile here. And then we came into that pivot and there was like one more hurrah into that crazy ass fucking Jupiter Saturn cross. Man, that'll go down. And we had one gentleman who said there's like 6 different celestial events all happening right in here. So I guess that's what the market was waiting for. So, but anyway, I guess the point I'm trying to make here is if this is some sort of cycle top and we have to do something along these lines for the next 20 years. And I mean, also too, if people moved away from the gold thesis as a fear asset proxy and they're buying into this sort of crypto thesis as a good sort of proxy to get your money out of the system, fear asset cycle, then top should look something along those lines right in there, right? And I don't know how deep we go. You can see that this low here came back to these lows from just prior to the big blow off top. So I might argue if this is the blow off top, what are the lows? Probably these lows in here probably hold. So that's probably, in fact, it would make sense, right? So that's the old historic high. That high obviously is pretty important, that high there. In fact, actually we use like the high to low trend line. That would be a very, very important pivot. So yeah, I kind of like that kind of thinking for the gold market going forward. You might even actually, well, maybe yes. Might even go something like that. And then drag that out. That line up with that. I don't know. Something along those lines. So this would be a fear asset cycle proxy. Since we're in the growth cycle right now, actually I don't really expect big things out of this. What we might even want to do to get a really good look at what the hell this thing's worth is look at it versus the M2 money supply. Yeah, that's what I was afraid of. So you can see there's the bottom in gold prices in 2000. We're actually not that far away. Fascinating how the gold price actually topped in 2011 on a real dollar basis. So I tell you, the gold investors, they've been really left behind this whole cycle. They the Peter Schiffs of the world and all that, they really got hoodwinked. So anyway. Okay, let's get back to the questions. Hopefully I spoke to Francis, your question there. I actually agree with you. I think, yes, we are more like the early 1940s than the 1980s. I would wholeheartedly agree with that analysis. Okay, number 2, why do you make use of the bot setup rather than the fib extensions levels combined with the ABCD harmonic pattern? You can do both, but just remember, and if you're level one, we don't get into harmonic trading until level three. And the only reason why it's level three is there's just so much shit that we have to cover. So, level two, we start off, moving averages, horizontal support and resistance, gaps, volume profile, WD GAN, futures market structure, commitments to traders reports, coding algorithms. Level two, it's candy store from day one right through the end of level two. 12 weeks of just one thing after another thing after another thing after another thing. It's not like harmonics are any better or any worse. I think they're all of the concepts are all equally important. So it's just, that's how long it takes to get to harmonics. And also too, there are a couple people in the sort of trading universe that there's one gentleman, Scott Carney, who has just sort of said, I am Mr. Harmonics, whether you like it or not. Harmonics were here way before he was, but nonetheless, he's just decided that he is Mr. Harmonics. So I like to spend some time introducing you to his world, and also have you read some documents to understand harmonics is quite often with harmonic patterns, you're going to be looking for trades and trade setups that are at very, very awkward positions, especially for a new person to invest in. Very awkward. In fact, one of my favorite harmonics is actually completely opposite to what we teach you in the level one program. So if you see a harmonic pattern, you have to put the place where it happens into context. So if I'm hunting a bullish harmonic pattern, ironically enough, I want to see M's, which is completely opposite to sort of the let's keep this simple market structure. M's are bearish, W's are bullish. So that's what we want to sort of start your education. Just try and get the basics down. W's are signs of increasing demand and decreasing supply. M's are signs of increasing supply and decreasing demand. Harmonic trading, however, actually looks for M's within bigger W's and W's within bigger M's, which can really screw with new traders' brains. So I don't really want to introduce you to harmonic trading until you put some miles under your tires, hunting things like 3-step setups, and doing things like trade location. I'll use things like fibs to help me see trade location. I'll use things like extension levels to see trade location. And then once we are at trade location, I would like to look at my indicators and see signs of divergence, either bullish or bearish, basically saying that the market is either stronger or weaker than what price itself is leading you to believe. And then I'd like you to hunt for market structure. So if you're at the bottom end of the range, you have bullish divergence, then I want you to hunt for W's. Just keep it really simple. Use 50% rules of the range as targets. Make sure that the size of that trade is $2 of reward if you're proved right versus $1 of risk taken. I mean, that's the whole premise of sort of basic technical analysis and approach to trading. It was the approach that I was first taught by a commodities trader back in the 1980s, good old Kenny Roberts. And like I said, I had dinner with one student yesterday, and he told me, Brian, all I do is I trade the 3-step setup, and right now my win rate is 92%. 92%. I mean, why would you bother with harmonics if you have a win rate? And this is sort of where it gets kind of funny with a guy like Paul on Wednesday's crypto show. He did the level 1 program. He doesn't trade harmonic levels. He did a level 1 program, learned the L-Tangonator 3-step setup. He does the bot as well, and he's making all the money he needs. So I would almost say for you that I don't want to, I definitely don't want to derail your education. And unfortunately, if we jump into harmonics at the beginning, then you're not going to learn the fundamental structure of the way price works. This is really screwy stuff. And it's going to have you taking trades at very odd trade locations. So I don't really want you as beginners to even be thinking about harmonics. You know, put some miles under your tires. Let's get a whole bunch of this basic stuff done. Let's get you trading the 3-step setup. If you want to trade the bot, it's like a bastardization of harmonics, but it is not harmonic trading. And really, the whole purpose of the bot is to give you the ability to trade trend continuation. So, you know, the gentleman made reference to the ABCD, which is in essence sort of like lower highs and lower lows, or higher lows and higher highs, or trend continuation. But you have to understand from a harmonics perspective, all of this move, like this ABCD that you see here, none of this is any kind of trading information until you actually get to this point D. That's the only point that's of any relevance to harmonic traders. So like this butterfly pattern, you have to be patient and wait for the X, wait for the A, wait for the B, wait for the C, wait for the D. And then once we get to point D, then you want to look down at your indicators and you want to say, are we in divergence? Then you want to look for price structure. This is a bullish pattern. And like I said there earlier, I mean, you're going to be taking a bullish setup right in the face of a big fat amp, which is very, very difficult for new people to trading. So I don't want to set you up to be thinking harmonics until you've had some time and you've built up a, you know, ideally I'd love to see you 100 paper trades of the bot, and the bot is doing nothing more than taking the A to B, seeing a C, anticipating that the market could go to D, and we're going to hunt for structure down in here, down in this C area. We're going to be looking for bull divs. We're going to be looking for W's in price off the lower time frames. But make no mistake about it, that is, the bot is not harmonic trading. It is a bastardization of harmonics. So I don't know whether that helps answer your question, Raz, but the long and short of it here is these are kind of like apples and oranges. You know, we get to fib extension levels. For you in level 1, I want you actually thinking, and you know, one of the main reasons why I don't want you thinking about entering a trade at harmonic levels just yet is because, you know, like this ABCD pattern that you've made reference to here, there are actually several different types of ABCDs. So which one is it? Is it an AB equals CD, where this is basically this symmetrical pattern? Or is it an alt ABCD that actually goes down to 1.272? Or maybe it's an alt ABCD that goes down to 1.618. These are all perfectly valid. All of these are perfectly valid AB equals CDs. And to start you off from trading, I would prefer that as we come into these point Ds and the market has moved a long way, and if you're short here from around the C area, or if you're long here from around the C area, a la the bot, you're going to be taking profits, getting out of those trades when we come into these point Ds. Harmonic traders are actually looking to get into the trade at these point Ds. But is it a symmetrical point D, ABCD? Is it an alt ABC equals CD that you're hunting? For you new beginners, I don't want you having that conversation. It's just too much stressful. Just keep this simple. Put some miles under your tires. Show me those 100 paper trades. Go through the level 2 program. Talk to me about price gaps. Talk to me about WD GAN. Show me that you've had a lot of time that you put into this. And then in level 3, we'll start talking harmonics. And these are actually what are called PRZs, or potential reversal zones. And we want to talk about how we're going to incorporate this now into your trading. But in level 1, I just don't think it's setting you up for success to go down that road just yet. And that's my direct answer to you, Raz. Hope that helps. Veritas says, upcoming electric vehicles boom is gonna drive up silver prices. Well, there's a statement. All right. Me personally, I'm going back to horse and buggy, because I am bullish on horse manure futures. What? Actually, I want to learn how to ride a vaca. That's what I want to do. I want to be trucking down the highway with Liam behind me on our vaca. Right, Eddie? Okay, number 3, do you make use of fractals, candlestick patterns when entering your bot or fib extension trades? Remember, you in the level 1, I don't want you to think about fib extension trades as new trade locations. I want you thinking about getting out at those. Could you use fractals and candlestick patterns as your market structure signal? Absolutely. It'd be interesting, Raz. You've probably heard me say this, and I'll give you all a lead in. Let's see if anybody can answer this. What is Brian's favorite candlestick pattern, which is almost impossible for almost all new traders to actually trade? And it goes dun 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 dun. Do, 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 do. Yeah, the poll question, Chris, should be, now what the fuck is Brian going on about now? A, he loves the sound of his own voice and now he's singing to himself. B, he really likes the George Lucas films, and sometimes he finds himself singing the songs in his sleep. Hey, there you go. Crowbar, got it. Crowbar, that's TBG crypto, right? TGB, TBG, TBG. Yeah, all right. Anyway, good to see you, bud. Hope you're not driving down the road, though. Anybody answer it on YouTube? Oh, look at that. What do we got here? Question list, see viewer questions, and choose which ones to answer. Uh-oh. Okay, what was that? What is Brian's favorite chart pattern? Actually, well, no, that's a different question because Eddie actually got that right. What's Brian's favorite chart pattern? What's Brian's favorite candlestick pattern? That's a totally different question. And actually, Eddie got that right, the first one. You're awesome, dude. Don't worry about it. It's all good. You're awesome. So Brian's favorite chart pattern, for the record, is what's called a Q reversal. You will never see it. But it was taught to me by an old gnarly, actually, he was a commodities trader too. And a weekly key reversal is the absolute most intense signal you will ever see on any price chart. And oh, by the way, yeah, there's a reason to subscribe to TRI. Well, it turns out that actually on a daily basis and weekly too, we give you screened key reversals on US stocks. on weekly US stocks, on Canadian stocks, on what else we got? Australian stocks. Oh, even weekly key reversals on European stocks, key reversals. I mean, that's how much I love key reversals. But the answer to my first question was the Empire. The Empire is, and actually, I might have it on here. Let's see what happens if I do this. Hey, there you go. So the Empire pattern looks like two big candles, one usually a big up candle and one usually a big down candle, and a little candle in between that pushes to new highs. It looks like the Empire State Building. Ideally, you'd like to have the lows exactly the same, but that's still a valid Empire. It's really not. Very, very difficult chart pattern for new people to trading to trade. Here you go. Perfect. Look at that. Beautiful Empire. So that's also taught in the education program. This is a 3-bar fractal. And this is actually like the pro traders. They love this chart pattern. Really, really difficult pattern to trade though. Yeah, you to a certain degree, yeah. The Empire is, if you this happens to be a 30-minute chart. If you drill down to like a 5-minute chart, you might find that there's a nice head and shoulders pattern all contained in that. Could be, yeah. The way that, the easy way for you to see fractals and empires and is there's a gentleman, and actually I don't think it's the same guy. But anyway, on TradingView, there is an indicator called the Williams fractal tool. I always thought it was Larry Williams, but I think it's a different Williams. But if I go BTC USD, right, just nice and simple. And actually, it would be interesting to see whether there's a weekly one. But then I go indicators. And I know we cover this in the education material. So there's no reason why you can't do this. Look at that. TRI fractal alert. Somebody's even created a script like that. Anyway, here's a Williams fractals tool, and there are all the little sort of indication of fractals. And you look at this. Oh, perfect. This is absolute textbook Empire. Can you see this? Boom, boom, boom. Let's go back to my room. Where was that image, right? So there is the Empire. Can you see that? Boom, 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 boom. Big old Empire States Building. And then we head on over to that Bitcoin chart. I mean, wow, what a fantastic illustration. You guys are so lucky. So perfect. So could you trade that? I don't see why not. You could, try to incorporate this into a bot setup. The only problem with bot is that it wants 3 lower highs. Is that not a valid signal? Well, you tell me. The proof of the pudding's in the eating. Look at this. Was that a good signal? Looks like it's a pretty good signal to me. So really, that's just a question of what is the criteria that you need to see in your setup that gives you confidence to take the setup without reservation. You might say, well, Brian, this was pretty easy, right? This was a huge ABCD that was forming. And since we knew that this was a cycle top, for Bitcoin, and we knew that the market was most likely to come down into reload zones because we know that institutions don't want to buy up markets, they want to buy down markets. So what a surprise. And we know that you've been talking about how much you love this institutional fingerprint right down in here and here, and there's ABC. So I don't care what signal I get. I've just watched the market consolidate, and if I get any kind of justification for getting short, I will. Now, you might have taken this fractal top, and you would have been stopped out there. And interestingly enough, I'm a big fan of Linda Bradford Rajke, and I actually asked her one day when she was on a call with this old prop firm that I used to work with. I asked her, how many, if you're thinking bear, and let's say this is a day trade, right? We're on like a 10-minute chart or something. How many shots would you take at this sort of bare thesis before you give up and say, you know what, I was wrong, move on? And her rule is take 2 shots. So here's a really good example where you might have been like, well, you know, bear ABCD heading down. This is a really good location for ultimate destination. I would really like to get short. I see this straight line move. I see a consolidation. I did take 1 shot thinking that we were just going to go boom, 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 boom. That failed. Here comes another one. And should I take this? Turns out this one totally kicked ass. So that's a trader's life. Get used to it. The only reason why I build the setups the way that I do is this is really a confidence game. Are you confident in the setups that you trade? The only reason why I put so many damn rules into, well, I can't do that unless that is going to, because I know that, you know, and what I teach you guys is I want to see location, indicator confirmation, price structure, go. As I illustrated earlier, there are guys like Brandon Rigo, good old mountain man, where he would just see this mountain man 61.8 and he'd say, you know, I'm just going to buy that. I will move my stop up. If the market does rally back up a little bit, I will move my stop up and maybe I'll take a little bit of profits and then I'll put my stop at scratch. And sure enough, on the next candles, boom, he's stopped out on the rest of the position at scratch. That's the way Brandon trades. There's really no right or wrong way to trade. The right or wrong way to trade is what works for you. The only way you are going to figure out what works for you is you have to put a lot of trades on. And you have to go, ooh, yeah, no, I don't like buying overbought markets. That wasn't a very smart idea. Usually, unfortunately, a lot of people start off this game with all of their money. It just inherited 100 grand from Uncle Uncle Louis. He just passed away. And so I'm going to get in there and I'm buying $100,000 worth of Microsoft. And they go through the process of learning what works for them. But by the time that they actually figure out what works for them, they've lost half of the money in the market. Why not paper trade? You can write down that, hey, I am going to short 41, what is that number? 41,888.87 on a stop, 1 tick below this low. I'm going to risk to a break of this high, and you could have done exactly the same paper trade on this setup here. And you just simply say, if I get stopped out, I get stopped out. Log, journal, diarize. How did you feel? I feel kind of shitty. You know, okay, well, but you know, that Beamish guy says he talked to old pro traders and they always say, don't lose focus and take one more. So then you take the next fractal that comes in and it turns out this one rocks and rolls. And you know, the whole point of trading, I hate to say it, folks, you want to see the whole damn point of all of this, what we're doing here is look at the amount of risk that was required if you took that fractal there. Not much. And it turns out that that was wrong, right? There it is. The next one you took turns out was right. Same kind of risk. But now, you know, let's say you just moved your stops every time we had market structure. You move your stop down, move your stop down, move your stop down, move your stop down. You're still in this short. And your stops against that high there. I mean, I would use 3 high-low method, but that's a method that's taught in the level 3 program. But the whole point of this is to make sure that this box is proportionately smaller than this box. That's the whole point of this exercise. The only way you're going to learn to actually make money from trading is if consistently, let's change this to green. It's nice. Hey, look at me. I'm a winner. Consistently, you want to make damn sure that your green boxes are bigger than your red boxes. The irony of it all is that you might actually have, you know, and actually I did a day trade that I demonstrated for the site on Friday where this was my scenario. Now, who can tell me if I took these 3 trades, Is my win rate greater than 50%? 1, 2, 3. Is my win rate greater than 50%? Answer I'm looking for is no. It's only 33%. And yet, am I a profitable trader? Add up my losers, boom, boom. My winner, who's bigger? The winner's bigger. The winner is bigger than 2 losers. So I'm only 33% accurate, and yet I am a profitable trader. Now, ideally, we'd love to get you to the point where actually you're doing something like this, where it's okay to have a loser, but ideally we want to shoot for 2/3 accurate, 66%. Now, in this scenario, is this guy a profitable trader? Well, you see. So the good part about forcing yourself that if you are right, you're going to get paid and you're going to make a nice big chunk of money. The good part about this is that technically you don't even have to be right more than 50% of the time, and still you can be profitable at this game. And this is why most people fail at this game, is what ends up happening, and it drives me crazy, but I can't stop it. And this is half the reason why the prop firm guys are like, Brian, you're wasting your time. But what usually happens in this game is the exact opposite. Is they will, in fact, here, let's even increase their accuracy. So because they need to be able to, post in their trading rooms that they were right, the equation actually gets turned around and it looks something like that. Where, in this particular case, I'm now 75% accurate, and let's maybe even reduce the wins, because often I see people that just take like little profits. They got one big ugly loss, and then what ends up happening is they say, look, I'm 75% accurate, but I'm actually losing money. This is the way most of the public participates in the market. And as you saw from what I just did there, we actually want to unprogram you from living that life. And, while this probably isn't the best example, let's see. In this case, even in this case here, with being horribly inaccurate, you're only accurate 25%, you're just losing a little bit of money. So that's the irony of this game. And like I said, ideally what we would like to see is to get you to 66% accurate. And what that means is that you have 2 winners for every loser. If you can get to this stage, then you are so made in the shade. But the irony of it all is that you're not right 100% of the time. In fact, in this case, you're wrong a good 30-40% of the time. But if you can get to this kind of life, you'll make more money than you'll ever need for the rest of your life. And as I said, unfortunately, and I would even argue, this is perfectly fine. You are still a profitable trader as long as you make sure that your winners are substantially larger than your losers. And in this case, I can be right only 33% of the time and still be profitable. So anyway, food for thought for you. Okay, so hopefully that answers that key reversal question. Well, not key reversal, fractal question. And yes, I absolutely love the empire. So whoever asked that question, if you want to make it a personal goal that you are going to hunt for empires as your entry, that would be a really good exercise, because empires are the shit, but they are so hard for new traders to take. They are very, very difficult because you have to enter the short here and you have to risk all the way back up here. And I think that example that I just showed you from Twitter, how would you feel noticing, right? There is the empire. You go short here, but look at this candle. You know, like, ooh, I'm so smart. I'm so smart. Look at me. And then beep, yep, I'm smart. Look at me. And then look at this. Wicked rally. Oh, fuck, I'm dead. Oh, fuck. Oh, fuck. Oh, fuck. Oh, no, actually, everything's okay. Oh, everything's okay. Ooh, look at me. Look how smart I am. Oh, yeah, I'm so smart. Look at me. I'm the best. Can you handle this? A lot of new people to trading can't handle this kind of stress. It's just too much for them. So go figure, right? All right, I hope that answers that question. Moving on. Will TRI offer some Black Friday deals for level 2 and 3? I'm not quite sure how that works. Josh actually is our marketing guy. This is more, you know what, Brian, you know what Brian's skill is? Brian's skill is talking charts, talking psychology, talking risk management, talking indicators. I don't actually try to get involved on the site when it comes to things like marketing. I mean, I try to just sort of leave the marketing department to their own. I have some trust that these people have the best intentions and or they know technology. I don't even really like this whole Black Friday thing. It's a completely manufactured sales event. It just smacks of American capitalism, and I don't really like American unfettered capitalism. So I'm not really the best person at TRI to ask. If anything, what I would suggest is we probably should have our marketing sort of representative on the site come on the daily briefs through the week and sort of outline what are the offers that are on offer. I think also too, there are a couple sort of small things with regard to the dashboard that we're really focusing in on right now to try and sort of promote cyber weekend, Sunday, Black Friday, all that stuff over the course material. But, Josh, if you are watching this, that's probably a good question that maybe you and I can just quickly chat about. And we can just review specifically what is actually on offer for this Black Friday deal. I don't really actually know what the answer is to this, to be honest with you. Kind of amateur, but anyway, it is what it is. Right now, I would just simply say, the best person to reach out to is Josh on the site. He probably know best. I suppose he and Julian are working together on what all the sort of course offerings and Black Fridays and Cyber Mondays and all that kind of stuff. And I suppose maybe if we're really lucky, I'll have my shit together and maybe we'll have some sort of one pager or something that we can talk about in next week's video, weekend video that is all around that Black Friday, Cyber Monday event. And that would just clearly articulate exactly what's on offer. Okay, number 5, on the TRI site, there is an option to subscribe to Brian Signals, News and Breadth. Could you explain the details of these tools? So that's basically what this dashboard concept was. When we first built the website, we didn't have this sort of thing that runs across the top here. Like if I go to, say, video recordings, this is the way the website looked. And what I said was to the team was, looks like, I wanted to replicate my 1980s website, which is basically what this project is. By default, we have the overview page. If you do sort of click on dashboards, if you like basic site membership, I think also the school membership, this basic overview page loads. We are debating about how to do this correctly because that loads way too slowly. But that's for development down the road. The point here is that the in-depth breadth analysis, this is my life's work. I have a bad habit of giving too much stuff away for free. I have made a religion for myself. You're not getting this for free. Sorry, it's just not going to happen. I am going to be very strict about this. This is my, like when I teach you guys things like fibs or moving averages or, momentum indicators, divergence, 90% of that stuff is, it's common industry information, risk management models and strategies and, all that kind of stuff. It's not really like, I can't say it's like Brian's invention. And some people that teach these courses online and stuff, they actually have the audacity to get like really defensive and hey, that's my concept and you're stealing from me and all that kind of stuff. And the only thing I ask is that if you are going to teach these concepts, teach them correctly. Because I absolutely hate when somebody does teach a concept, but they teach it incorrectly. And then when they come to TRI and they go, hey, little old lady and all that. And I'm like, that's not little old lady. Yeah, so we got to, try and forget what that person told you. And this is a little old lady. So I don't, I think it's a good idea that if you are going to use other people's concepts, that you at least teach them correctly. So most of the concepts that I teach on the site, if it's just industry standard stuff, like reload zone. I mean, if you don't know what a 61.8 fib is and the relevance of that, well, I can't really help you. It is just industry standard. 78.6, same thing. I mean, you saw the harmonic cheat sheet. I mean, those numbers are everywhere, all over here. It's just common industry standard stuff. So anybody who says, well, this fib concept, this is mine, well, you're full of horse shit. This stuff's been around since, Fibonacci himself. Anyway, the point I'm trying to make here is that the breadth indicator and this whole idea of the histogram, because this is a bullish percentage study of the DI, which is the DI itself is a complete concept of my own. It is the combination of about 45 different technical indicators off of 3 different time frames. And then the breadth indicator itself is an amalgamation of the entire sort of universe of those DI signals. You will never find this anywhere else. I absolutely guarantee you. You won't. It is my baby. It is my gift. It is the good Lord put all these goddamn molecules and atoms together, and this is my contribution to the universe. It's my life's work. I couldn't have done this without Joanne. Joanne gets a big part of this because I spent many years. I don't know whether you've ever seen it, but to get to the point of that image that you just saw, oh crap. Well, this is the last question, isn't it? Yeah. All right. So if anything, this is a perfect segue. So, here's the Wayback machine. This is the only way that I can show you this now because basically we had to kill the .ca website. But and actually, I'm even hearing that the Wayback machine itself is, the powers that be would love to kill this Wayback machine idea. See if it'll even work. Maybe it won't even load now. Yeah, there it is. So just so you understand, I spent, oh geez, let's see if I can spell. Yeah, that's so small. The rash, I think I got that right. Nope. What am I doing wrong here? That should have worked. Wonder what I'm doing wrong. Oh, there you go. So yeah, you're smart. Thank you, Chris. Couldn't do this without Chris. All right, it's gonna load. There we go. So this, of course, is, and this is where, my business partners have, ironically enough, they're just as much to blame over this as Joanne. But, we started out after, and it doesn't matter, I can pick any date here. This project, it was a good, probably, geez, I would say easily 10, 20 years in the making. I can actually show you price charts because I save everything. I can actually show you price charts of the DI index going back into like I think probably the mid 90s. Just done it by hand, just writing it out by hand. But this, to get to the point where I did this, and you all look at this, and when I first got on TradingView and showed the kids this, they all go, "Oh, 1980s website." So that's why we call it the 1980s website. I suppose you could probably call it the 1930s website. But anyway, the point being that I taught myself MySQL, JavaScript, HTML, PHP, CSS to be able to do all of this. And I invested a lot of time while Jojo was with us. Beautiful wife. Rest in peace, dear. I was I was blown away. Yesterday, somebody actually remembered that it's Jojo's birthday coming up here. And they were like, yeah, well, let's wish Jojo a happy B-Day, wherever she is in the universe. It really took my breath away. Anyway, so this was its rendition before Jojo passed. It was coming along. It was doing its job. Unfortunately, as you guys kind of pointed out, very 1980s. This is now in the 21st century. I honestly think that this is going to change the world. As soon as this catches, and one day it will. I mean, I tell you, I don't know. At some point, I'm just going to get, at some point, people are going to start paying attention because these signals and these trades are just absolutely phenomenal. I mean, you can't get a better trade setup than that. I mean, and the thing is down here, and what was so bizarre is that we had a whole bunch of studies on the site that were suggesting that there was going to be a big rally into the end of the year. Yet, whenever I went out into the public, everybody was like, basically, this is the end of capitalism. It's all over. Right? And ironically enough, it was that whole sort of British debacle that was sort of the end of the move. So, I mean, it's just next level, and it's here, it's live. So thank you, Jojo. This is my gift to the universe, and it works really nicely. So the issue here, though, is I'm not going to give this away for free. The days of Brian just mindlessly just donating free of charge to the universe, those days are over. If you would like to participate in this and you would like this information, I mean, these key reversals, this was so cool. I'd love to show you, but Josh hasn't given me the green light yet. He actually went and did a study of, all he did was he just took the key reversal signals. I think it was the weekly US key reversal signals, And he just stacked up all the returns, and it was in the hundreds of percent of just simply taking the key reversal, like daily bullish key reversals anywhere. These weekly bullish key reversals, I mean, this is the poop. But I'm not going to give this away for free anymore. And if you would like access to this, it's an incredible database. I mean, I have all my sort of momentum models on here as well. And I like to go through this. It gives me a very clear sort of image of what the market looks like and where to expect outperformance and where to expect underperformance. And now with the histogram, really, it's really simple to find pivots in the market. Why would you subscribe to something like this? Well, the answer is to make it a little easier for you to make money. And I'm telling you, it doesn't get much easier than that. You just wait for the market to flash ridiculously oversold conditions, hunt for W's in the indicator and bullish structure, and just any kind of bullish setups you take, you get in there and take them. You're here to make money from trading. I mean, I don't know how many easier it gets than that. So thank you, Jojo, for 18 years, you being in my life, sweetie. After she passed away, I believe that she came to me and she visited Liam and I together. She told me, Brian, you have the potential to make a real difference in this world, real positive difference. You guys have heard me say this for 12 years now, PMA for the win, right? Try and make this positive. Try and make it so that you're like, okay, actually this is achievable. I'm not just blindly buying some shill. And I'm so disappointed, even like the Real Vision guys, they all got sucked into that bullshit market top. So they're not really doing you any favors. But tools like this will help you make good decisions in the marketplace. You want to buy, you just wait for everybody else in the world to be freaking out on the sell side. And then it's actually really easy to make money. So thank you, Jojo. Thank you. Sadly, we've had a lot of TRI people come and go. There's so many people that get sick in this world. So Joby, God, I think about you on a daily basis. James Cole, I think about you. And then sadly, there's probably a whole bunch of people that I don't even know that they've passed away because this is this global sort of internet experience. But thank you to everybody. I have 3 affirmations. I'm going to leave the broadcast to this. Affirmation number 1, even though it's been a horribly long journey and I've had to deal with the socialized medical system, I've had to swallow a lot of humble pie, but I firmly believe my son and I will be living together again. I think now you can actually help that happen by subscribing to tools like this that we have built that are value added. You can come and participate in the school program and get educated and learn how to run a small business of trading. I'm not asking for donations. I'm not asking for handouts. I'm giving you a value proposition. And if the world just beats a path to our door because we build really good products and solid products, then I think that I can afford to be able to give Liam all the supports and stuff that he needs in his life. And he and I can live together again. I believe that I've been given this opportunity, as Jojo would say, but this gift of being able to talk on the internet for hours on end and try and make some sort of positive difference. And on Friday, I asked the community, is anybody actually getting any value out of this? And the response that I got from all of you was overwhelming. An unequivocal, Brian, for God's sakes, don't stop. So I won't. PMA for the win. That's what this is all about. Trying to help you. That's why I've been doing this for the past 12 years. And I'm not going to stop. That's my promise to you. Even in what I would consider the absolute worst part of this cycle, where this kind of stuff is going to really question your belief in any of this. This isn't fair, what's happened here. This should not have happened. But it does happen because the world is dominated by these people. I'm the guy who's trying to balance this out. For all of these jerks in the world, there's got to be guys like me that, yin and yang and try and just balance things out. I honestly believe that's my life's mission. And finally, my third affirmation is I really would like to try and make this online experience that we've created actually a physical, real location, so that if life just has shit on you, and I can see that, I can say, you know what? You go to TRI campus. Maybe it's not called TRI campus. Maybe it's just going to be my own home. You go to Portugal and you unwind and you just look at, we got fresh fruit. We've got Chris's crops, whatever. We've got 17 beds. So you can find a bed, and actually we're planning on adding more and yurts, and we've got my son there, and I really hope that the whole community can wrap their arms around us all looking after him and just keeping an eye on Liam, making sure he has a good, happy life. He's got fresh air. But more importantly, that this online experience becomes tangible, where you can actually go to a place, that all of this sort of online PMA shit, there's actually a physical location where this can happen. And I believe that it doesn't have to be a donation kind of thing. It can actually be, Brian, I actually want to participate with you in this. I want to invest. I want to be part of this experience. And that's my third affirmation. Is that this Portugal dream that we have now? Maybe it might not be Portugal. Portugal doesn't really have that great of crypto taxes anymore. Might be somewhere in the Mediterranean. I don't know. But that's my third affirmation, is that I believe I want to create some sort of physical manifestation of this TRI experience. So I hope you've enjoyed that conversation I've had with all of you. I hope you learned something out of all of this. I've got about 3 minutes before I have to leave for Liam. So PMA for the win. If all of you could just, maybe just a moment, just close your eyes and just wish Liam and I good, happy, karmic thoughts. I noticed that when I ask you guys to do this, it's remarkable how happy he is. So it must be getting through. My number one job now, as soon as I hang up, is to go and make a positive difference in this poor human's life. And I think I'm doing that, and I think he's happy for it. It's the same thing with all of you. I'm never going to give up on him. Never. And I won't give up on you. This is my life's calling. And I believe that this is a value proposition. This isn't some guy just sitting here going, please give me handouts. This is a value proposition. And I'm here to help you win at this game. This isn't just bullshit. So, okay, I'm going to try and stop talking. Crazy, if you could take us on out of here, I'd love you for it. PMA for the win. Slow and steady wins the race. Don't take no wooden nickels. Remember what your number one job is. The only thing left for Brian to say now is bye for now.